Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Huang Pengrui. Today is Friday, August 29th. Yesterday, after responding to the earnings report release, it seemed like there wasn't any particularly significant news. We also mentioned that, looking at the market going forward, now that this uncertainty has been resolved and it looks like there will be a rate cut in September, does that mean everything will be smooth sailing from here on out? Yesterday, the VIX also hit a new low for the year. So now, we'll be discussing this topic in a moment. Next, we found an article that talks about how Trump is actually a sign of a deep structural change in American politics, not the cause, but a sign. This means that Trump isn't the reason for this change, rather, the change happened first, and then Trump appeared. We'll also share some thoughts on the midterm elections. Alright, let's get started. Tonight is actually pretty important, because a lot of data will be released at 8:30. The data released at 8:30 could very likely determine the direction of the market today. At the moment, before the market opens, most tech stocks are trending down. So, are there some? It's being said that maybe some market investors don't want to hold stocks past September, so there's some selling pressure here. However, if the PCE comes out and it's in line with or below expectations, then the decline might be relatively smaller. Another important point is that there will be economic data on personal spending and personal income. First, let's look at personal income, which will be released at 8:30. All the important data today will be released together at 8:30, so we'll take a look at them together in a bit. The expectation for this is 0.4%, while the previous figure was 0.3. You can see that overall, personal income may have increased mainly because working hours were longer last month, and overall wages only rose slightly, leading to a general increase. So, in the current situation, there haven't been large-scale layoffs in the job market, but hiring has slowed down. The main approach is to make more use of existing employees and increase their working hours a bit. So currently, there is a slight increase expected in personal income. As for personal spending, it is also expected to rise slightly, with the forecast at 0.5%. As for the PCE, here we're looking at both year-over-year and month-over-month figures. The overall expectation is 2.6, which is about the same as the previous value. For the monthly figure, the expectation is 0.2. So we'll have to see later, at 8:30, whether the data matches these expectations. Next, for the core part, the expectation is 2.9, which is an increase from the previous value. You can see that the core is a metric the Fed pays more attention to, and this rate is actually at a pretty high level. But right now, everyone is thinking this might just be a one-off, so as long as it stays at 2.9 or below, people aren't going to read too much into it. As for MOM, the expectation is 0.3, which is the same as the previous value. Next, let's look at the US dollar index. Right now, the dollar index is fluctuating weekly in this range, but going forward, there's actually a chance it could move further up or down. The first reason is because of how the expectations are written, and the second is the questioning of the Fed's independence. Today we saw that Kubi has filed a lawsuit against Trump, and now both sides have officially entered the legal battle stage. We'll talk more about this in a bit. Next, looking at the yield on US Treasury bonds, for the 10-year, it's showing a slight downward trend right now. However, it's still at a relatively high level, around 4.2. We'll have to see if it can gradually move lower in the future. As for the 30-year yield, it's relatively holding at a higher level, still around 5. For the 2-year yield, it's currently showing a more noticeable decline as expectations for interest rate cuts continue. Next, let's look at the S&P Wink with tongue sticking out 500. Yesterday, it saw gains, and now it's broken through 6,500 points. We can say this is a strong breakout, which actually suggests there is more upward momentum ahead. So at the moment, the outlook for September is relatively optimistic. Although September does have some historical or seasonal factors that could lead to adjustments, for now, we're seeing more positive information. Next up is the Dow Jones. The Dow had a slight increase yesterday, and actually, most of the indexes saw small gains. The Nasdaq was pretty much the same, with similar performance. Alright, now let's first take a look at the global developments. Right now, we see that German Chancellor Merz mentioned that it's actually very difficult for the leaders involved in a Ukraine war to meet, Basically, there's no hope. This means that the war in Ukraine is likely to continue. Actually, after Trump and Putin met previously, Trump had mentioned that these two leaders might meet, but now it looks like that's basically out of the question. We also mentioned that yesterday in Kiev, Russia continued its attacks, and in Europe and the UK, all the locations where their delegations were present were attacked. As for Trump, he wasn't surprised by this, and it's not unexpected now, since both sides have been fighting for a long time. So at the moment, it looks like the Russia-Ukraine war will keep going, becoming an ongoing event and a source of uncertainty in the market. In addition, Brazil has initiated a tariff retaliation process against the United States, and this process is expected to take some time. As for this, it's currently just something reported by Brazilian newspapers themselves, and there hasn't been any confirmation from the Ministry of Foreign Affairs. Currently, the procedure of Brazil's Foreign Trade Chamber is as follows. At first, the Foreign Trade Chamber will conduct a 30-day evaluation, and then the relevant government departments will draft a response plan. So, they need to first assess whether these tariffs have a real impact on Brazil's economy before taking any action. As for their response, there are actually many ways they can react, but everyone needs to discuss it first before making a decision. So this process will take relatively longer, and Brazil can also continue to negotiate with the United States for tariff reductions during this period. So you can see that most countries are still working hard to push for lower tariffs, because as long as it's before the final decision or before legislation, these things can still be changed. So, including Taiwan, all countries are currently in this independent process. Next, this Sunday, which is the day after tomorrow, the SCO, or Shanghai Cooperation Organization, will hold a meeting in Tianjin. The main focus will be on the joint statements and whether there are any cooperation agreements among the participating countries. Actually, this organization is led by China. It's similar to NATO, but whether it's in terms of the closeness of its members or other aspects. Its shared interests are relatively loose. The origins of its members also don't have a clear boundary. It's mainly non-Western countries, primarily developing nations. However, many major countries are part of it, such as Pakistan and Iran. So at present, the SCO could potentially become another organization that leads the world order. We should pay attention to the SCO, because this time, Putin, Xi Jinping, and Modi will all be attending together, giving them a chance to communicate and discuss. In addition, the participants include the President of Pakistan and the President of Iran. These two countries are also relatively large nations. As we know, India and Pakistan have long been at odds, and Iran has recently faced a lot of sanctions and pressure from the West. So, seeing the leaders of these countries all gathered together, we can watch to see if there will be any new discussions or improvements. This is something worth paying attention to. Alright, next we'll talk about developments in the US government. Today, one of the possible candidates to succeed power as a Fed governor, Waller, mentioned that there will be a rate cut of 25 basis points this time, and that in the coming 1 or 2 quarters, further rate cuts are expected. So, at this moment, this is his current approach. If he sees any changes in the PCE or labor market data, he will adopt a new stance, which could be even more dovish. Currently, he believes that inflation expectations in the US economy are anchored, but labor market risks are increasing. This basically aligns with what everyone is focusing on right now, that inflation might spike temporarily, but if long-term expectations remain anchored, there's not much to worry about. The bigger concern now is the labor market, which could weaken rapidly. This is essentially in line with what Powell said in his speech last Friday. Next up is Fed Governor Cook, who has started to take action by filing a lawsuit against Trump. He mentioned that even if there were errors in the property declarations, they were not intentional deceptions, and therefore, no one was harmed. So, what this really means, especially the latter part of the sentence, is that he's actually admitting there were errors in the declaration, but what he wants to emphasize is that the mistakes weren't intentional, and nobody was harmed as a result. So, it feels like this legal battle is far from over and will continue. However, at the moment, the judge for this first trial was appointed by Biden, so there's a chance the judge might block it. So we'll have to see how Trump responds next. Also, Cook mentioned that the reasons cited by Trump, quoting several then senior officials, were just false pretexts and not sufficient grounds to justify his dismissal. So it looks like this whole thing is going to drag on for a while. But for now, the overall impact on the market is limited, because as we mentioned before, both the Fed and the market want to see interest rate cuts, and everything is moving in that direction, so at the moment there isn't much of an effect. Actually, it's not just Fed Governor Cook who's been accused of mortgage fraud, claiming 2 different houses as her primary residence to get mortgage benefits. Others have also been accused of mortgage fraud, such as California Senator Adam Schiff and New York Attorney General James. So right now, as we previously mentioned just yesterday, Donald Trump, the former president, tends to consistently use the extensive machinery of the state or his considerable political power to meticulously carry out various acts of significant retaliation and numerous legal lawsuits, all specifically aiming to profoundly influence his political opponents and effectively weaken their overall political strength and influence. And this is still an ongoing process. Alright, next, let's talk about an article that was published on this day. It mentioned that, in theory, because voters are currently dissatisfied with various national issues, such as tariffs, marijuana legislation, immigration, and so on. So, in theory, the Democratic Party will make significant gains in the 2026 elections. However, this situation might change next year. Because right now, voter divisions are, for the most part, based on their region and education level. The majority, about 60%, of voters who haven't attended college tend to lean Republican. There are also other factors favoring the Republicans. For example, currently, there are more registered Republican voters, and in recent years, with the redistricting of electoral districts, the Republican Party has been the main beneficiary. This mainly affects the House of Representatives, because in the Senate, each state elects one senator, so there isn't much difference there. Next, the Republican Party's fundraising is significantly higher than the Democrats', so as things stand, this is a factor that could make it difficult for the Democrats to win in 2026. And as the article mentions, even if the Democrats win in 2026, it doesn't mean they'll have an easy victory in 2028. Because right now, it actually looks like the issues in a 2028 election will be pretty much the same as they are now. In other words, the country as a whole may already be leaning toward the Republican Party, and the national issues remain the same. So even if we make some gains in various states and legislatures, at the national level it might still be impossible to overturn the current Republican base. And right now, the Republican Party actually isn't really focused on appealing to swing voters, it's just trying to solidify its MAGA base. On the other hand, as we mentioned, since the 1990s, the Democratic Party has lost the support of the working class and rural voters, and it's become relatively too dependent on college graduates. As for the Republican Party, it's just continuing to shore up its base. This also brings up the point that, at present, these phenomena have led to Trump's victory. In other words, Trump can win simply by consolidating his MAGA base, and that's a new development going forward. So actually, regardless of whether Trump continues to stay in power, future political leaders are likely to have even clearer and more radical characteristics. First, let's look at a few charts. You can see that voters are actually dissatisfied with Trump, but when it comes to the economy, inflation, trade, and immigration, most people actually do not support his approach. At present, you can see that his main challenge is that the domestic mood is actually not that positive. Next, let's talk about the America First Act. You can see that most people are against this act, 60% oppose it, and only 40% support it. And most people, over half, believe that this act will harm the economy. About 40% think that this act will make it harder for their families to make a living in the future. Another point is that tariffs are actually seen as having mainly negative effects, so it's not like what some people in the current US political scene or Republican supporters claim, that tariffs are overall beneficial to the US economy. In fact, if you look at nationwide surveys, most voices, or the mainstream opinion, or rather, the majority of people, have some doubts or express opposition to these issues. Next, we can see in this part that the voting patterns in the Senate and for the president are becoming more and more aligned. This means that once a state's political stance leans toward a certain party, it's harder for that to change. So, in the future, there will be fewer swing states, elections will become less intense, and there won't be much competition. As soon as a candidate is nominated, you can pretty much tell who will win, because the state belongs to a certain party or holds a particular political stance and ideology. This is the change happening in the current political landscape of the United States. Now, it seems that the Republican Party's base is mostly made up of grassroots supporters, right? As we just saw, about 60% of their base falls into this category, and most of them are people who haven't attended college. But as we'll see in a moment, under Republican rule, some people actually seem to benefit more, which is a bit of a paradox. The Republican Party uses MAGA and MHA to attract voter support, but in reality, these policies, like the big tax bills and tariffs, mainly impact those who are relatively economically disadvantaged. Yesterday, we mentioned that Donald Trump, yesterday we talked about how the director of the Centers for Disease Control and Prevention, the CDC, was abruptly fired, that is, the head of this significant public health agency was summarily dismissed. So, in this case, before the CDC director was actually fired, He went to ask Trump about it, because the person who fired him was Health Secretary Robert Kennedy Jr. He wanted to know if Trump agreed with this decision, and a few hours later, Trump did agree. So, the CDC director really had nothing more to say. There was no reason to argue about it. So why did Trump support Robert Kennedy Jr.? It's because last year, in 2024, he mobilized the supporters of Make America Health Again, which is actually like a branch of MAGA, called MHA, and helped Trump win a sweeping victory. So for next year's general election, people are also hoping that Robert Kennedy Jr. can continue to rally these MHA supporters, which would increase the Republican Party's chances of winning in 2026. That's why Trump sided with Robert Kennedy Jr. on the issue of firing the CDC director. He's endorsing Kennedy's position. American media have also pointed out that the CDC director is actually a relatively professional figure with a technical or medical background, and his approach to vaccine policy is generally in line with mainstream practices. And now, actually, in this. 1 second, 1 day. Actually, there are a lot of disputes like this happening in the US right now. If you look at today's news, the CDC issue is still making headlines. This situation is still ongoing, and if we look further, currently, what we're seeing in the US is the nationalization of politics. That means, no matter what level of election you're in, the topics being discussed are very similar. Basically, the idea is that if I keep talking about the same issues, I can win at both the national and local levels, so I don't really need to change my position. On the other hand, this also means that voters can be easily stirred up by the same issue, or that their value systems have already become more polarized. So you basically get the sense that the same set of issues can keep working really well. As for the Republican Party, because of these changes, it's now much harder for them to experience an electoral disaster. And currently, more than 80% of House and Senate races are non-competitive, meaning that as soon as a candidate is nominated, everyone already knows who's going to win. This means that, in the end, the result is that for the Republican Party right now, as long as they mobilize their base, they can basically determine the outcome of the election. Looking back at history, you can see that if a president has very low approval ratings and people are dissatisfied with his policies, it's very easy for his party to lose badly in the midterm elections. His party might not be able to control the House and Senate easily, but because of all the factors mentioned above, this gives the Republican Party a chance to control both the House and Senate in 2026. So, can Trump's political maneuvering continue? What results will his tactics bring? We've discussed this. This is a variable in how politics will affect the economy and the market going forward. So, we'll just wait and see. Next, let's look at the following. As we just mentioned, if your income is over $100,000, you'll feel pretty good about life and have some confidence. But if your income is around $50,000 or less, that confidence isn't as strong. So, as you can see, right now in the US, it's mainly the wealthy or those who benefit more who are doing well. This chart shows the same thing. It's mainly the wealthy who are supporting most of the consumption. You can see that the gap between the spending of the wealthy and everyone else is actually getting bigger and bigger, and overall you can see that too. The top 10% of high-income earners contribute to about half of all spending. So right now, the wealth gap in the US is quite obvious. However, it seems that MAGA supporters are still firmly backing the Republican Party, and that's the current situation. Alright, next we'll start talking about market trends. Yesterday, there was a key factor in the market, which was that the US annualized Q2 GDP performed well. The expectation was 3.1, but it actually came in at 3.3. This is mainly because Q1 was relatively weak, so Q2 looks better due to the quarter-over-quarter calculation. The main driver was investment. We'll see in a moment what happens after Q2. Looking ahead to Q4, meaning the second half of this year into next year, the economy is expected to be relatively weak, while inflation remains relatively high. So for now, Q2 appears to be more of a one-off growth. Today, we're talking about a few companies. For example, Marvel and Huda. Their manufacturing center business and their next quarter revenue forecasts both fell short of market expectations, which led to a significant drop in their stock prices. As for X, we'll need to keep an eye on Broadcom's performance going forward, because Broadcom itself is still the main beneficiary of X1. What we're seeing is that in the S or GPU sector, it's mainly the leading companies or those with major revenue, like Huda and Broadcom, that are expected to benefit significantly from AMD and Marvel. It looks like this trend will continue. Next, as for Style, its profit forecast was in line with expectations, and its financial report for this period actually performed well. So you can see that this is the weapons business, and its profit margins are really being questioned by everyone. The profits in this industry are relatively low. However, going forward there's a chance it could rise along with sovereign assets, because this is actually a clear AI narrative. When AI does well, this kind of external diarrhea often does well too. But this MC-style diarrhea is a bitter pill to swallow. It means your costs are so high, and yet you're able to significantly raise your selling price. That means you can only compress your profit margins. Next up is SMCI. There are reports that in the 2025 fiscal year, their financial statements showed ineffective internal controls. But for now, it doesn't seem like that's the case. There hasn't really been any reaction to this in the pre-market. Going forward, SMCI will probably fluctuate along with the rest of the sector. Actually, right now in the hardware space, chip stocks are still preferred over 457. As for 457, in the end, it will still move forward based on market sentiment and investment direction. Gradually, in fact, Dell is more likely to drop first, and then slowly recover step by step. The way its stock moves after earnings today will probably be quite similar. Alright, so looking at this, after the first and second quarters this year, you can see that the numbers in the second quarter are relatively high. After the second quarter, since consumer spending makes up the largest part of the US economy, we'll probably see a weaker trend, with growth hovering around 1 to 2%. So consumer spending will also decline, staying within that 1 to 2% range, which is just slightly higher than the overall GDP. In addition, according to inflation forecasts, inflation in the PC sector is expected to continue rising this year. By the fourth quarter of this year, it will reach a relatively high peak, around 3.2%, which is over 3. Next year, the whole year will still be above 2%, so this means that inflation in core PC is really hard to bring down. The current expectation is that even by the whole year of 2026, it will still be above the target of 2%. Those were previously included. At the meeting, he mentioned that if it's below 2.5, he feels that's about right, okay, and that would allow interest rates to stay at a lower level. As for how low, that's not very clear, so for now. Hypia said that if it's between 2.5 and 2, then there is indeed some room for rate cuts by the Federal. But if inflation hasn't really come down, we can see that interest rates won't drop to very low levels in the future. They probably won't go down to around 0 or 1, or at least there will be a certain level maintained. This is to ensure that inflation expectations remain anchored. So, the expectation is that it can slowly and gradually come down, but that's the current situation. So going forward, the overall economy will relatively slow down, and inflation will remain at a relatively high level. It just depends on when it will finally come down. Alright, next let's take a look at Marvel's financial report and stock performance. Actually, its stock price hadn't really gone up before, and now it's showing a clear decline again. In contrast, Broadcom has performed quite well, and you can clearly see a significant difference in their stock price charts. Next up is Dell. Its trend has been rather slow and steady. Even though it might be down today, over time it could still gradually rise along with the sector. As for SMCI, it's currently at a relatively low point, so we'll have to see if it can also rebound and rise again with the rest of the group. Alright, next, let's talk about the dynamics of the US market. There's a piece of news today. Coinbase has become the preferred lender for cryptocurrency miners. This news shows that Coinbase, which mainly focuses on trading and custody, is now expanding into broader business areas. Simply put, for cryptocurrency stock investment, Coinbase is the top choice. If you want to buy crypto, buy it directly. But if you want to invest in a stock, Coinbase is the most recommended option, as it provides the fundamental infrastructure for the entire crypto industry. Whether you want to trade, use custody services, or similar. Carefully managed lending and borrowing, and so on. Even today, the US government announced that it would put GDP data on the blockchain, and that's also being done through Coinbase. So right now, Coinbase is benefiting across various sectors, and it's expected that in the future, its stock price performance will become increasingly decoupled from trading volume, because at present, the stock price is closely tied to trading activity. If the cryptocurrency market is doing well, the stock price goes up. If trading in cryptocurrencies cools off, the stock price drops. So going forward, if its business model can become more broadly diversified, then its revenue streams can also become more stable. Its stock price might have the potential or opportunity to show a steady upward trend. Next, regarding FIX, when answering questions during the earnings report, it hit a low point yesterday, reaching its lowest level so far this year. So why is this happening? We mentioned that this is because many hedge funds are shorting the spot market while going long on futures. This way, they can profit from the price difference, and it's a steady profit. As a result, the spot price is being deliberately suppressed, while the futures price isn't being intentionally pushed down, so it's relatively higher. That's why there's currently a price spread between the two. They're doing this simply to make money. It doesn't mean they have a directional view on the market. That's one part of it. The other part is this. Some funds are also shorting fixed products while going long on other highly volatile commodities, so they can also profit from this price difference. Moreover, if the market starts to fluctuate, even though they might lose money on the short fixed side, they can still make money on the long side with these high volatility products. So this helps offset those losses. In other words, it narrows their losses and limits the scale of what they could lose. These two types of trades have been very popular in the market over the past few days, and that's also one of the reasons why the fixed products are currently relatively low. But what does this lead to? Right now, if you want to buy VIX, it's pretty expensive, so some people might choose not to buy it, and those who do will have to pay a higher price. If the market reverses, the shorts will have to cover their positions, which will further increase volatility. So at the moment, the market is relatively clear, and there doesn't seem to be any obvious negative news. That's why these kinds of trades are happening, but this kind of strategy can change very quickly. That means if there's any sign of trouble in the market, this kind of trading could end very quickly. So we really need to keep a close eye on it. But just because we're talking about this doesn't mean there's any directional trend in the market itself. It could simply be a trade aimed at making money, nothing more. We've seen that Coinbase stock, after experiencing some significant gains in the past few weeks, is now in a relatively weak consolidation phase. And indeed, the current price is at a relatively low level. We'll have to see what happens next. If there's another sudden spike, that's something everyone should keep an eye on. So we saw yesterday that the S&P Wink with tongue sticking out had a nice breakout, surpassing the high from August 13th. It climbed above both the quarterly and annual moving averages, which is also a positive sign. Additionally, the 2-week RSI hasn't shown any signs of being overbought. We'll look at a chart in a moment. Overall, the current market situation is still quite good. According to Bank of America statistics, as of Wednesday, the day before yesterday, U.S. stocks saw an inflow of $8.8 billion. Large cap stocks received $5.5 billion, small cap stocks $5.8 billion, and growth stocks $600 million. Additionally, international equity and bond markets, cryptocurrencies, gold, and money market funds all saw inflows. This data is for the week ending Wednesday. Funds continue to flow into the market, and this trend doesn't seem to be ending soon. Now, because of the favorable conditions brought by potential interest rate cuts, the rally may gradually shift from large cap stocks to small cap stocks. This means that small cap stocks might start to perform in 2025. Their consolidation period has also been relatively long. In fact, there may be some breakthroughs happening now. The IWN represents the Russell 2000 small cap index, while SPY represents large cap stocks. So, it looks like there's an upward trend developing here. Next, actually in August, the Russell 2000 ETF outperformed the QQQ ETF. The main reason is that small cap stocks have lower valuations, and as market sentiment shifts, funds flow into these more speculative small cap stocks. Also, as mentioned, there are expectations of interest rate cuts. This is the S&P Wink with tongue sticking out 500 breaking out. So right now, for example, the main index has actually broken through 6,500 points. Looking ahead, we can see that the number of companies standing above the quarterly and annual moving averages continues to increase in the market atmosphere. But currently, it's just under 70%. So going forward, the position of the stock market should become healthier, and this upward trend can last longer. Additionally, looking at the RSI, people usually say that above 70 is considered overbought, and right now it's around 64. It's still not close to being overbought. So at this point, the overall structure is still pretty healthy. In this context, the S&P Wink with tongue sticking out 500, or the broader index futures, are likely to keep moving up for a while. That means there's still some room to run, which is different from before when people wondered if September would be more risky. But right now, the outlook seems relatively optimistic. However, we still need to keep an eye on things. We have to watch how the economic data performs. Basically, this is something that changes day by day depending on events or economic data, so we need to see if anything shifts. But if things remain stable, it looks like there's still some room left for this rally to continue. But September is indeed the weakest month for the stock market throughout the year, and according to statistics going back to 1927. The average monthly return shows that September drops by 1.17%. So, looking at it now, September is definitely a month everyone needs to be a bit cautious about. But as long as we make adequate preparations, we can still follow the rhythm of the market. So who should we follow as a role model? Because if you think about it, like you mentioned before, when the stock market goes up, one option is to wait for a pullback. But usually, missing out on the rally is actually a bigger loss. So instead of just waiting and waiting for a pullback to buy in, most of the time that pullback might never come. So it's better to just at least allocate enough funds and then also keep some funds in the market to participate in these trends. This way, first, you can sometimes take some risk hedging actions, and second, by keeping enough funds in the market, if there really is a pullback, you can still make some moves and increase your position. But as for the current situation, you can also see that in September and October, the list levels are relatively high. So that's the situation right now. Basically, the overall market is about to enter September, and later I'll look at the economic data. If the economic data itself doesn't show much change, then there really isn't much negative impact on the market's upward trend. But as for what happens next, it really depends on events and economic data, and whether there are any unexpected situations that could have an effect. Let's take a look first at the economic data. Everything is in line with expectations. Personally speaking, income is as expected, and spending is also in line with expectations. As for PCE, it's also in line with expectations. When things meet expectations, that's a good thing. So today, everything is as expected, so it looks pretty good. So for today, it seems like there's nothing to worry about, and this upward trend should continue. Let's take a look at the current movement of the Nasdaq and Nasdaq futures. Nasdaq 100 futures have already made a move up. The S&P wink with tongue sticking out 500 is the same. The US dollar has slipped a bit. The 10-year and 2-year Treasury yields have also dropped, which continues to reflect expectations of a rate cut. So, with the 10-year yield falling, you could say that the current economic data is favorable for both the stock and bond markets, and the signals look pretty good. Alright, now let's take a look at the stocks that are up or down in pre-market trading. Currently, according to our overall research, many large cap stocks are still down in pre-market trading, so we'll have to see if things improve after the market opens. The stocks that are up are mostly those that have released earnings reports. If their performance is good and they raise their guidance, then we still see some upward movement. On the downside, Dell is the main one, and SMC is also among the top decliners. You can see that most of the major large cap stocks are still down, but right now it's just a slight drop, about 1%, or close to 1%. Now let's take a look at the overall situation in the US market. You can see that small cap stocks are still trading quite actively, especially those stocks priced at $1 or $2, or even less than $1. These are currently the ones with the highest trading volume. As for the gainers, it looks like there are some companies with individual factors driving their performance. For example, they might have announced a stock buyback, or it could be a merger or acquisition, right? Yes, and then there are some other company-specific factors, or some of these are due to strong earnings reports, like a firm, for example. As for the bigger losers, it looks like Manville is leading the way for now, but it should still be okay. Alright, that's all for today's market wrap. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, We share in-depth explanations of global financial events with you every day.